Okay, so once again, here we are. This is chapter 3. Now, chapter 3, once I said again, it is a pretty short chapter. It's only 34 pages. But once again, customers, there's just so much information impactful, especially when you're dealing with customers, because like I've mentioned before, customers is a whole entire concept. It's a huge section of QuickBooks because it's primarily the core of your business, right? Your job is to work with your customers to provide them a good or service, right? You're selling something to a customer. So customers are actually split into 3 different chapters, right? Chapter 2 was just the main core, basically, of understanding how to record a sale. All right, that's a huge chunk right there. That chapter was like 50-something pages. Now, here in chapter 3 is where we're going to take a little layback of what other additional things that you can do when it comes to looking at a customer's perspective. Now, again, here's one thing that you need to know. When you sell a product or a good or service, you are expected that many people will either have 2 or 3 things, right? They might be dissatisfied with the product or service. They might buy a product and maybe they break it, or they purchase it and it's broken. There are many reasons that a customer can come back to you and return an item. Now, and this is where we're going to be introduced to the idea of credit memos, okay? Now, what is a credit memo? It's similar to a vendor credit, but in this case, it's actually its own separate form, the credit memo. And what it does is it's a means that you provide to your customer, whether these reasons here, whether they're trying to attempt to return and refund merchandise that they purchased, whether they ask or demand a customer discount. Third thing too is if they are trying, or they overpaid a bill. Maybe they paid a bill not knowing and completely forgot about the discount that you gave them, so they just overpaid it, and whatever remaining amount that you have a couple options to either send a check back, or 3, you can apply it to a future purchase. For many reasons that you have to deal with a customer, that you are either so allowances fall under this category as well, right? If you give your customer an allowance or a discount off of these items, then yes, you're going to use a credit memo. Now, again, for most businesses, they, depending on what kind of business you are, if you are the kind that allows countless returns, money back guaranteed. Again, these are going to be based on the company policies that you set, and guidelines and rules about what customers can do with your products, right? If you give them money back guaranteed, like QVC, right? They offer for you to purchase an item from there, and they give you, I think they give you 90 days for you to use the product. And if you absolutely do not like it after 3 whole months, you can send it back with your money back guaranteed. All right. Now, again, that's their company policy. Now, other company policies, such as if you buy electronics, so Best Buy, for example, you're only given 7 days, because they expect you that if you open that box and you attempt to plug it into the wall, that's already considered a used item, and they only allow you 7 days to return that item. So once again, it depends on your company policy. Now, some places, they don't allow any refunds. So how they get you is they offer a store credit, or they offer, some kind of means like a full exchange, right? Or you can exchange for the total amount of goods. You can exchange it by purchasing a different product, or exchanging it by swapping out. So there are many company policies that you can have to resort into a customer either having a refund or whatever. So it's going to be based on your company policy as well. What guidelines and what can a customer do with your product? So once again, we're going to be talking about credit memos. So again, all these reasons that you need to know in order for you to accept or deny a customer credit. So once again, we're going to be talking about what a credit memo is and how to record one and how to create one. So once again, refunding customers by check. Usually that's the best way to go because one, it also is, a check is a means of to keep you a paper trail. So then you keep your banking information very organized, okay? You definitely don't want to just give cash out just for any reason. Now, most cases, a lot of customers are gonna always want cash back because, again, cash is the easiest form of money that you can turn around and purchase a product or service. So in this case, we're gonna talk about our very, very first customer here. Once again, Mr. Bob Mason. He bought from us 30 packets of photo paper, I believe, or photo paper. He bought 30 packets, and he comes back to us and said, "I bought too many. Can I get a refund for 10 of them?" Okay. If our company policy says you have 30 days to return a product, well then, I'll go ahead and grant him his full refund. Okay. So let's go ahead and explore how we can be able to produce this credit memo. Okay, right here on the home page, you got it right here. Where is it again? Right here, refunds and credits. Okay, that is on your home page. If it exists on your home page, you bet you it's going to also exist on your menu bar too. So go to customers, and here it should actually say credit memo. Okay. And in this case, receive payments, refund. Okay, hold on. Create statements, create financial charges, enter financial statements. Create invoices. It should be on here somewhere. Maybe I just can't see it. But you should have the option to be able to refund your customer here, right here, create credit memos. There it is. I was looking for refunds. So once again, right here it says create a credit memo. Credit memo is interchangeable with the term refund, okay? Now, do not get that confused with a vendor credit, okay? Vendor credit, there is no such thing as a credit memo for a vendor, okay? It's only for customers. So there you go. You have it on here. If you go to, once again, your customer center, you're able to do just as whatever you can do here, right? You can also do a refund here, right here, credit memo, right? Right click, you got a credit memo there, create credit memos, okay? And then, of course, down here, you can also create a credit memo here, okay? And I believe on the invoice itself, at the very top of the window, you have that little section that you can do a refund for. All right. Now, they do recommend that if it's just anybody, go ahead and use the one on the home page. But if it's a specific person per se that's coming in and and again, you're trying to so for example, right, if it's a specific person that has a specific invoice, you definitely want to go and use it in through the actual, look up the invoice and actually find it and then click on that refunds window tab. So once again, if I go to Bob Mason, because that's the one that we're looking for, and I believe this is for invoice, let's see. Okay, Bob Mason, invoice number 3947. Okay, so this one. So if I double click on this, right, as I mentioned before, now here it shows me that this is an invoice of Bob Mason but purchasing 30 of those photo papers. Okay, now once again, you can create a credit memo right here at the top of the window. Now, this one is actually going to make it a lot more easier because guess what? It's going to pull all the information for you and it's going to fill in all the information for you. Now, if you go into the home page for a regular person, right, who's just returning a random item, then you're going to have to manually enter everything in and credit them however they want to be credited for. But in this case, this is a specific person, and the best thing about using the refunds button on this one is that it pulls all the information. So watch this. So if I go ahead and up here at the top, you have the button for refunds/credit. If I click on that, what's going to happen is a credit memo is going to pop up, and all the information is filled in for me automatically. But also, second thing too is this is from an invoice, so it's just pulling information from an invoice. Okay. Now, rule of thumb here is they always recommend you to, when you're creating a credit memo, make sure that you create the number to it to make it associated to that actual invoice. So that invoice was invoice number 3947, and how you could tell that this is linked to that very invoice is that you're going to add a letter C. C for credit, okay? Now, the book recommends you to use C just because, credit makes it easier for you to use. But once again, you can use any letter. If you use R for refunds, then go ahead and put R. You can use R for revision, revised, whatever means of a letter that you want to use to make sure that you keep some kind of track record system. Now again, I'm going to put C because that tells me that this is a credit. And it's going to be linked to this exact invoice, right? Invoice number 3947, right? Now, the date they said that Bob Mason decided to return this was February 15, okay? February 15. So, going back to February, and it is the 15th, okay? So now, once all that information is already in here, now, here's where I have to go ahead and determine what the refund credit is for, okay? Because in this case, it's telling me that I'm refunding for all 30 packets. That's not true. He's only refunding 10 of them. So in this case, what I'm going to do is I'm going to go over here and I'm going to modify this credit memo and to reflect the correct amount. So in this case, I'm not giving him a full refund for the full amount of items that he's purchasing or he purchased and returning. He's only returning 10 of those items. So once again, if you move away or click away, it's going to automatically recalculate for you. This item is taxed. So with this right here, and you're using a credit memo, it's going to automatically also give the tax back to this customer, okay? So that's what this is, right? It's saying right here, you don't have to manually go back and fix the tax on it because this is a taxable item. By you clicking this credit memo, it's reverting and it knows that this item is being taxed. So therefore, it's also going to refund the tax amount for right here for $10.20. Okay, so here, a grand total that we're giving back or refunding Mr. Bob Mason is going to be $133.80. So once again, here, QuickBooks is very smart. It will do everything for you. All right. And now I go ahead and click, you can thank you for your service. But here in my memo, because this is very important because we're going to talk about customer statements in a couple sections down below. By you putting something in the memo, this is what's going to appear on the customer statements, the invoices, the sales forms, whatever it is, right? Because this is what's going to keep track of how you organize your information, right? Making a small note or a small memo, instead of having to open the invoice itself, it will show you the memo on the side, and you can easily know exactly what is here. So in this case, I am refunding refund 10 photo paper. It's photo paper. Yes. Okay. Refund or return, whatever words that you want to put in here. I still have thank you for your business there because we're still going to thank him. He's still our customer at the end of the day. And I'm going to go ahead and click Save and Close. Now, here is what pops up once I do that. Now, it's going to give me 3 options. And this is the 3 options that are normal to any kind of business, right? Number 1 is you can either retain it as an available credit. Now, what does that mean? Now, most cases, right? A lot of the times, vendors do this often all the time. They never want to give you back your money. Instead, they want to always retain it as an available credit. So the next time you shop there, they're going to apply this extra credit to the next invoice, okay? Because they never want to give you back your money. So make sure you understand that. And you can also do that too by giving them a store credit card. Making sure that the money that they invest into your company doesn't leave the company. It stays in the company by retaining it as an available credit. So this is the common one. You can always request for store credit or exchange, whatever it is, right? The second option is to give you a full refund. So therefore, I can mail him, I can send him a check and give him a full refund for the amount that he sent to me originally. And that's also a policy too, right? A lot of stores these days, they look at your receipt. They say, oh, what do you want? You want a store credit? Are you gonna keep shopping, or do you just want your cash? Now, some places don't even ask, and they process it. They're like, okay, I give you your exact change back. All right. So once again, that is an option that you could choose. Now, the third option is going to be applying it to an invoice. Now, this is only an option if the customer has not paid for the items yet. In this case, Mr. Bob Mason actually already paid for these what do you call it? He already paid for these 30 photo packages. So in this case, the option to apply it to an invoice, it wouldn't make sense because he already paid for it, right? So the best option is either retain as a credit or retain it as, or you give it back to them, whatever account that you just calculated yourself for. So in this case, right now, of course, you have to make sure that you keep track of each customer and make sure, did they pay for it? And if they did not, then what you can do is you can apply it to the invoice. So then when the bill comes back to them, right, you're going to be sending a new statement out to them or a new invoice with the corrected amount with the applied discount or applied credit. Okay. So in this case, I believe we're supposed to give him a credit, or we're going to give him back his money. Okay?
It says give a refund.
Yeah, that's what give a refund. We're going to give him back his money. Okay? So once we click that right there, when we give him a refund, this is what's going to happen. Now, because we said that in this section that we're going to be giving a refund based by writing him a check. So here is this, here it gives you a little window here that fills in all the information. It's going to fill in that you're sending a check to Mr. Bob Mason for the amount of $133.80. It's going to come out of your checking account, so make sure that's the correct account. And once again, you are writing a check, okay? We're going to talk about this function in a bit, okay? And this just gives you how much money you have, so you don't write a check if you don't have enough money. Once again, San Jose, you're going to be sending him the check and billing it to him, and so on and so forth. So this memo right here, it is optional about what you want to write here, whether you actually want to say that this is an actual refund. This is just a code number. Once again, it just depends on what your company wants to do for this section right here for the memo. Now, we don't have, or I don't know of if Imagine Photography has a code set up to say, well, this is a code credit for the customer. I don't know, but in this case, you can't. I'm going to leave it the way it is. I'm not going to edit it for any reason because I know where I can locate this afterwards, okay? So I go ahead and click OK, okay? And there, I got the Beeple approval. So now I have a pending check that I'm going to be writing out to Mr. Bob Mason. Now notice this. The invoice is going to stay the same because in this case, I didn't make any changes to this invoice because he already paid for this one. It even says right there, payment, he has already paid for this. So therefore, I'm just sending him back the money. So that means this invoice is done and over with. You cannot modify it at this point. Okay? And I'm going to go ahead and click that X button now because I don't need it anymore. Now, if I go ahead and click on Bob Mason in my customer center, now right here shows me that I reimbursed him for that invoice. And I know because my reference number here is going to be 3947C. So I know that this is directly correlated to the invoice 3947. Right? I know that these two are related because they have the same reference number. Right? And once again, this tells me that I credited him. All right. Any questions in regards to how to use a credit memo?
No.
No.
Okay, so let's talk about the next one. Now, if you guys remember from earlier today, Miss Maria Cruz has paid via credit card. Okay, and that's the next section we're going to talk about is how do we refund our customers if they paid us with a credit card? Okay, now there's a couple ways that you can do it. Now this is going to be the longer way just because in this example here, we don't have a paid service. Okay, because if we did have a paid service, it would be much easier for us to be able to process, just write a check and, this paid service is obviously going to take care of it for us. Okay, but in this case, I'm looking at a credit card and I'm not paying for that service because, again, any other extra paid services, subscriptions that you purchase through Intuit is obviously going to be additional, additional things that you can have. And we'll talk about that in payroll that you do have to pay for a payroll service for it to help you calculate for payroll. Now, in this case, right, that's the same idea here. If you want to pay for a service for QuickBooks to automatically credit someone's credit card, you do unfortunately have to pay a subscription for that. Okay, and it's called QuickBooks Payments. Okay, now again, if you don't have that service, that's okay. This is how you're able to manually enter this in and return the money back to their card. Or in this case, I believe we are we're going to be manually returning the amount back to their credit card. So here in this example, we're going to go ahead and select returns and credits on the home page, and we're going to fill it out for Miss Maria Cruz. Okay, so it's going to look just like this. Okay, so here, refunds and credits right here on the home page. And we're making this out to, once again, Miss Maria Cruz. Okay. Now, in this case, I could just write it back directly to Maria Cruz because this is not for a particular job. It's directly to that person. So here, Maria Cruz. Now, let's see. So credit card here, Maria Cruz. We're going to go for the for American Express, okay, and the below here is going to be the return for the two photographers, okay. So here the item here is going to be photographers. Okay. So in this case, maybe she already paid for services, but in this case, maybe two photographers decide to call in sick. So what we did here is she paid for these photographers and they called in sick. So we have to reimburse her for that. And she already paid with her credit card. Okay. Now, once again, everything's going to be here the same except for the credit number. In this case, this was invoice 2021-102. And once again, we're going to have that letter C so we know exactly where this invoice is being credited to. Okay, so once we have that, okay, and we're going to be crediting them for 2 of those photographers. So quantity is going to be 2. Okay, not 22, just 2. All right, and so there you go. Services are not taxable, so therefore, in grand total, we're going to be refunding her $250. Once again, I want to be nice to my customers, so I'm going to say thank you for your business anyways. Okay, and my note in my memo here is I'm going to refund for 2 photographers. Okay. So this is where everything looks good. I believe she belongs to the San Jose location. Okay, so there you go. Date looks fine. Okay, February 15. Again, dates are usually relative. So once again, everything looks good. Okay, I am creating a credit memo for the 2 photographers that she already paid for using a credit card. Okay, now I'm going to go ahead and click on that save and close one more time. Okay, and now you're going to get this window once again. Since she used a credit card and I'm refunding her, I have to give her a refund regardless because she paid with a credit card. I could give the option where she could pay the $250 for another invoice, but in this case, I best bet to just go ahead and refund her credit card. So I'm going to go ahead and click that OK button, and we're now, that same window where we wrote a check is going to pop up. But this time, you are not going to be writing a check. So we got to go up here in this little corner up here, okay, where it says the method that we're going to be reimbursing her is a check. That's where we're going to take our drop-down menu and we're going to go ahead and say, well, she used an American Express card, okay? Now, of course, we did this. She used a Visa, but the book says American Express, so let it be. Now, again, here is where if you had the paid service. So QuickBooks offers the extra payment service called QuickBooks Payment. If you go ahead and click this right here, it would automatically refund her credit card, no questions asked. Okay? But in this case, we didn't pay for that service, so we have to manually enter this in ourselves. Okay? So here we entered in the option that we're going to refund her account with the American Express card, and I'm going to go ahead and click OK. Now you got that beep of approval once again. So now, how do I manually enter in the credit card to return it back to her card? Okay, and that's where the next step is this is where you have to pay attention because in this case, I have to manually do it. So in order to manually do it, I have to go back to my deposits funds. Okay, because remember when we enter in our credit card in transaction, it's going to be located in our undeposited funds. So this is exactly where we're going to be taking it out from. Is we're going to manually override it and tell QuickBooks that we're going to send that money back. And by doing so, if we check and open up our make a payments window, here we have the credit card refund to Miss Maria Cruz on her American Express credit card. Okay? And we're going to select it and notice this. It's for negative $250. So this is how when we select OK and we make this deposit, this is how it's going to take that money out from our bank and put it into Miss Maria Cruz's credit card. Okay? And that is it there. So once again, memo right here is going to be refund for 2 photographers, right? You could do that. Again, the credit memo has the invoice number on it, so you don't need to do any extra stuff here. So here, we're crediting her for 1 American Express credit card for $250. And then we click Save and Close, and that's how we're going to be crediting her account. Okay? Any questions in regards to how to do a refund on a credit card manually?
No.
No.
Okay. So, next part of your book is going to ask you, or actually tell you about how to go ahead and write off bad debt. Now, in class or the accounting class, there are 2 methods of how we can use to write off bad debt. One is called the direct write-off method, which the book is actually geared towards, because if you guys remember from way back when, in chapter 1 on day 1, I told you guys that the purpose of QuickBooks, right, is to help you file for taxes. So therefore, the book is going to show you how to use the direct write-off method to help you clear out the account balances in your bad debt. Okay? Where as an accountant, if you're just a regular accountant and not a tax accountant, you shouldn't be using the direct write-off. Okay? You're not allowed to. Okay? Because it's for tax accountants only. Okay? So I'm going to also show you another example in this section right here. I'm going to show you what the book tells you, so using the direct write-off method. And then I'm also going to skew away from the book because, once again, this book is for tax accountants, but it's also for regular accountants as well. But using QuickBooks for the purposes of taxes is what QuickBooks is meant for. I'm going to show you how to also do, as a regular accountant, how to write off these accounts manually using the allowance method. Okay? Now that I mentioned all that, let's rewind and talk about what the heck is bad debt. So, as we know, if you decide to sell a product or sell a service to your customers and you allow them to place it on an account, therefore, you are at risk because you can't trust all your customers, because you don't know, once again, their financial position. You don't know what their situation is. They might have a job today. They might lose their job tomorrow. You don't know, and you can never predict what a customer situation is, especially if they have a potential to fault on their payments for the reasons of their financial situation. So therefore, if you do allow your customers to owe you on an account, you are at risk for potential bad debt. Bad debt is, in terms, meaning that customers are not going to pay for what they owe you. Okay? So therefore, you can't have that rotting in your books for forever, right? Eventually, you're going to have to accept the fact that this customer is never going to pay you back. And the best way to do it is to write off that bad debt. So then you can move on with you could continue doing your business as usual and continue to cater to your other customers. Okay? Now, of course, the government also hones on you, saying, hey, you only are allowed up to a specific percentage on how much you can claim as a loss if you are allowing the idea of customers owing you on a credit. Okay? Because once again, major corporations such as Walmart, Target, Think about all the $1 billion that they could have been receiving, but they don't because they allow millions of people to have a Walmart credit card or a Target credit card, right? And as you guys know, people just keep spending, okay? And with that being said, the possibilities of paying back somebody or owing so much money, right? It's almost impossible to pay back thousands and thousands of dollars that they give you credit for. Okay? So once again, this is teaching you how, in case those customers end up not paying you back for any reason or dropping payments because they can't afford to pay you back, this is what you can do, all right? And once again, the government holds down on you on how much you can actually claim as a loss. So you can't just be like, oh, all my customers, right? I'm going to say all of them, they're all going to be bad customers. They're not going to pay me back. If you do that, you're putting yourself and the business in a hole, because if you're selling to millions of people and billions of people owe you $1 million, that's $1 million that you decide to write off because you said you can. So that's $1 million that you lost because you didn't want to go after them to claim for your money, okay? And that's why a lot of these companies, they pay the big guys to sell off their accounts receivable so they can get that money to be able to continue doing business, okay? So with that being said, let's take a look at how we can start off with our bad debt, okay? Now, first things first is you need to create an account in the first place for the bad debt. So in this case, I go to my chart of accounts just to ensure that I have the bad debt. So I'm using the search window here, and boom, I do have an expense account called bad debt expense or bad debt, okay? Because you can tell it's an expense because it is account number 6,000, which is right here, an expense, okay? So that's the first thing, is that you need to have an account that exists for the bad debt expense first, okay? Now that that is intact or for surely there, the next thing you got to do is you have to create a line item or create an item. So once again, because this is our first time looking at creating an item, this is what the item list looks like. As you guys know, this deals with everything that you have in regards to your sales process, right? So if you want a service item, this is the services that you provide. If you want to sell a product, these are the products that you serve. Now, I'm going to go ahead and create my first item. And I do that by going down to the items. So just like any other means of creating an account or creating other items, right? Same thing goes here. You go down to the bottom and you're going to click new. Okay? So here it gives you a list of all these items that you can create. We're going to talk about this in chapter 8. Okay? So in this case, the book tells me that I have to create it as an other charge. Okay? And what I'm going to do here is the item name here is going to be, once again, bad debt. Pretty straightforward. And once again, is this going to be an item that is going to be used for assembly? No. You don't need to. So the description here is going to be to collect bad, or actually no. Let's reword that again. To write off bad debt. Okay? Straightforward. Now it's going to ask you to what account are you going to be linking this to. So once again, we're going to link it to my bad debt expense account because that's what I want to use. I'm going to utilize my item to link it. So then when I use that item, it's going to automatically pull the information from my chart of accounts saying, if I charge this item, I want you to use this account so you can use the debits and credits behind the scene to make this transaction work. So there you go. Now in this case, since you don't know, usually you don't know how much people are going to fault you on or how much a person's going to not make a payment for, this section right here, you don't have to have a specific amount, Okay, you leave it as 0 because this you can modify it as you go. Okay, and once again, if the item is taxed, it's gonna be depending on what it is. If it's a service item, then you can just toggle it and say it's a service item. If it is a product that you sold, then yes, you have to refund the tax as well because QuickBooks is gonna automatically calculate the tax in there. Okay, and then you're gonna go ahead and click OK. Okay, so there we have it. Other charge for my bad debt expense item. Okay. And then now I can go ahead and proceed with the rest of my steps to go ahead and write off the bad debt. Okay. Now, of course, they say go to your invoices, and I believe they say click on the previous invoice. So if I go ahead and click on this one, that's definitely not the one I'm looking for. Okay, I'm not looking for the Maria branch opening. So once again, a lot of these things could have errors because this might not be the one that you're looking for. So what I'm going to do here is I'm actually going to locate the exact invoice that I want. So I'm going to go to my customers center, and I believe it's an Anderson wedding. Once again, we're going to pick on Kumar, Sati, and Naveed. And I'm going to go ahead and click on this invoice right here. So right now, they owe me a grand total of $190. Okay, and right now, right, this was invoiced as of December 21st of 2020. So if we're gonna go into the future, right? Let's say it is February now, right? They've been outstanding with us for 2 whole entire months. We sent them letters so that we can try to get them to pay us, and they haven't paid us. So this is going to be the example where we're going to use a credit memo to go ahead and write off this bad debt expense. So, because all the information's here already, I'm going to go up to my window and click on that refunds/credits. Okay? And then now all the information has been in here and it's all aligned. And I'm going to say that this is as of today, right? That's perfect. As of February 15th of 2021. So it's been 2 months that this person has been outstanding and they haven't paid me yet. Now again, this was invoice number 4003. And once again, I'm going to place a letter C on it, okay? Because this credit memo is going to be associated with that very particular invoice, right? So now, here's what you have to do. Right here, it tells me that they got a photo session, an indoor photo session. Now, in order for you to clear off or to write off that bad debt, okay? So let's take a look at that invoice one more time, right? We know that it's $190. Now, let's go ahead and what we're going to do is we're actually going to clear this item, okay? Because now we know that this person's not going to pay me back. So I'm going to erase that item and I'm going to associate it to a bad debt item. Then you're going to get an error message saying, hey, I hope you know this item is associated with an expense account. Of course, you're going to ignore that and say, yes, I know. Okay. So then now all your information is going to be cleared out except for this, right? Okay. You're only doing 1 item, so make sure you know it's not 2. And the amount was for $190, right? Now, because this wasn't taxed, that's fine. We know that it's a service, so I have to make sure that I toggle this because, once again, this option allows me to toggle it. Now, again, if they purchase a product that needs to be taxed, then you're going to leave that item as a taxed item and it's going to calculate the tax for you. And what's going to do is, since it's a credit memo, it's going to revoke that tax. Okay? So there you go. I have everything in there. PO number, no need to because I already have my reference number right there. And then here, we're going to modify this because we're going to say to write off bad debt for invoice number 4003. Okay? Simple, right? And then now I can go ahead and click save and close because once again, because it's a service item, my tax is going to be 0. So here I have a credit memo for $190. I'm going to click OK, right? Now here are the options. Now in order for you to get rid of your invoice, you have to apply it to the invoice. And I'm going to click OK. So now it's going to populate this saying, well, the only invoice that is connected to Anderson, Wedding, Kumar, and Sati is going to be this invoice for 4003, which is the exact one for $190. We're going to click on that, make sure it's checked, and we're going to go ahead and say done. Okay? So now here's the invoice, and let's take a look at it. Now, I got the original invoice here is for $190, but check this out. Let's take a look at this detail down
I
here.
have a question. What was your choice on the available credit? It was, what was the choice there?
To retain a credit,
Retain available credit, that's the choice?
No. I put apply to invoice.
All right, thank you.
Okay. So there you go, apply to invoice, and then I select the invoice 4003, and then now here I am, and let's take a look at this invoice a little closer, right? Here we got originally charged for $190, but I ended up getting a payment applied or a credit for $190, and now this is where accounting behind the scenes is where it's going to take that invoice and it's going to zero it out because you applied this credit here, and that's how you write off bad debt. Okay? Any questions?
We're gonna save and close this one?
Yes. Okay. And then once again, on the Anderson Wedding Kumar Sati and Naveed, you see right here, you have the invoice 4003, and take a look at this. My account balance is now 0. So this person owes us nothing. Okay. Any questions?
No.
Okay. So I'm going to have time for one more, which is going to be to show you how to do it the accounting way, not what tax accountants do, not the direct write-off, but this one's going to be off the books. So please pay attention to this one, because if you do go out into the future and you are this, at least you have the trained knowledge to be able to handle bad debt expense as a regular accountant on the daily as you go. Okay. So once again, it's going to be identical except for one thing, okay? So I first have to start off by creating my allowance for doubtful accounts account, okay? So I go to administrative accounts. I know for a fact it doesn't exist because obviously the book is teaching you how to do the direct write-off. So I'm going to go ahead and manually create a new account. Okay, so let's see, new. All right, and in this case, what kind of category or what kind of account type am I going to be using? This one is actually going to be another account because it's not the standard ones that you would use. In case, this one's going to be an other asset account. Okay, other asset account. All right, and I'm going to go ahead and click continue. Okay, so now I have to create my account, and this one is going to be account number, it's going to be the allowance for doubtful accounts, okay? Now, again, depending on what company you work for, it could just be allowances for bad debt, it could be doubtful accounts. There are many different terminologies that many companies can use to represent their allowance for it, okay? But in this case, the general terminology or just the basic idea of the account is it's an allowance for doubtful accounts, okay? That is what I'm going to be using for the accounting class. And for those who have took my accounting class, you guys know this as well, okay? The allowance for doubtful accounts, right? And I'm going to make a note here that in my description it's going to be an allowance for potential bad debt, right? Because in this case, right, this account is a contra account to accounts receivable, right? It's a placeholder for us to kind of, it's potential bad debt. It's not bad debt yet until we claim it at the end of the year. In this case, this is a placeholder, so then when we continue doing our business, we worry about this customer on the side. Okay, so right here, it's just potential bad debt. It's not yet bad debt until you claim it at the end of the year. Now, as far as account number, I don't remember what account number exists, but I'm just going to go ahead and guess 19950. I don't know. And then again, it's not a sub account. It's not anything else except for a contra account. And the way that we use it is going to be this is just how we have to use it, because we can't associate it as an account receivable. We can't associate it as a current asset. It has to be determined as an other asset because it's a contra account. Okay. And then now I'm going to go ahead and click Save and Close. Okay, so perfect. That account number has not been used. So account number 19950 exists as allowance for doubtful accounts. Okay. So now that I have my account, I can now go ahead and create my item. So once again, same steps that you have to do for bad debt, except it's just the different name titles. Okay. So now you have new account or new item, and I'm gonna once again it's going to be an other charge, and once again this item is going to be called the allowance for doubtful accounts. Okay, and once again description is the same as what you wrote before. An allowance for potential bad debt. Okay, and now once again, which account are you going to be linking it to? In this case, it's going to be allowance for doubtful accounts. Okay, there it is, account number 19950. Okay, all right, and now we can go ahead and click OK. So now I'm going to have to create a fictitious person, okay, to represent an item that they bought. So I'm going to go ahead and create a fake invoice, okay? So I'm going to pick on Mr. Bob Mason because he's our fellow friend here. So Mr. Bob Mason, there he is. Let's say he purchased something in November of last year on, I don't know, the 17th. He decided that he wanted a Thanksgiving photo shoot. I don't know. Okay. So then again, invoice number, I'm going to say it was 2020-301. Let's just say any number that you want to throw out there. Okay. And once again, let's say he purchased outdoor photo sessions, okay? Because let's say, once again, he maybe wanted a nice fall picture. I don't know, but let's just say that he wanted a fall photo shoot, okay? And say he purchased three of those photo sessions, okay? Okay, once again, the service is non-taxable, so we're okay there. You can fill out this information, so thank you for your business, and this is for 3 outdoor photo sessions. Okay. Boom. Right? I'm creating an invoice. Oh, he belongs to San Jose. So once again, we're just creating the invoice so then we can go ahead and show you how to use the allowance for doubtful accounts item. So it's exactly the same as bad debt, except we're using the allowance method, okay? So I'm going to go ahead and verify that it is $285, okay? Save and close, okay? There we go. Now, again, I'm going to go ahead and locate Mr. Bob Mason because that's a lot of information that we had. So, Mr. Bob Mason, here we are. We have to look up for the 2020, there you go, 301 invoice. Double click on it. Okay. And now, because let's say fast forward, right? Mr. Bob, he's having some problems and cannot afford to pay this amount. So, now we're going to go ahead and say, okay, he's a potential person that he has a lot of invoices. So this is one of the bills that is a potential that he's not going to pay for. It's been 3 months already. Okay. And I'm going to go ahead and say, I'm going to go ahead and click on that record a refund / credit. And then now, once again, the information pops up just like before. And we're going to date this as if it is now February. So it's been 4 months now. Okay. And I'm going to say it's now February 17. Okay. This is for invoice right here. Tells us right here. So 1 with the letter C, because once again, we are creating a credit memo that is directly correlated to this invoice. Okay. And once again, we are going to change this item, making sure that you remember this number, okay? Remember, it's 285, okay? And we're going to clear it out and say this is an allowance for doubtful accounts, okay? Because in this case, it's just potential debt. We didn't necessarily claim as him completely not being able to pay for it, right? We're just saying we're going to place it in a placeholder so it doesn't hurt our business by holding on to this debt that we know that we might not ever collect. You're going to do quantity 1, and once again, the amount was for 285. Okay? Oop. I press enter by accident, but that's okay. So now the window says, what do I want to do? And because we're applying it to the invoice, or we're trying to get rid of that account receivable and transfer it to our allowance for doubtful accounts, we need to apply it to the invoice, and we click OK. So which invoice are we going to apply it to, right? Because Bob Mason has a lot of them. We're going to apply it to invoice 2020-301, right? And I'm going to go ahead and click Done. And once again, that's, okay, the invoice did not pop up this time, so I'm going to move that down. Here we go. Here's invoice number 2020-301, and let's take a look. Now, it says that the bill was for $285. We applied that credit to make it down to 0. And that's how you use the allowance for doubtful accounts. Now, once again, the allowance method, the reason why we use the allowance for doubtful accounts is because we're not sure if this person is for surely going to give up or completely not pay us, right? It's potential bad debt, okay? The only time that we actually claim that it's completely gone after we exhausted all of our energies to try to bother this guy and this guy hasn't paid you back, right? You can have a long time frame, whether it's 3 months, 6 months, even up to a year, and this guy's not budging. That's when you can for surely determine that this guy's not going to pay me back, so he's going to be considered bad debt. So the allowance for doubtful accounts, once again, is just a way to say, well, this person has potential for a bad debt, right? He did not pay for this invoice, but that doesn't mean he cannot pay you for the invoice, okay? Now that I have that here, I can go ahead and I can go close out my account here since my invoice is done, okay? Now, to seal the deal and say Bob Mason is just one crappy customer and he's not budging after it's been a whole year, that's where you're going to have to create an actual manual general journal to go ahead and transfer that amount out from the allowance for doubtful accounts and into the actual bad debt expense. So in this case, right, so I'm jumping a little forward because we did get to take a glimpse of what a general journal is, but we haven't actually necessarily taken a look at it or actually used it before, okay? So here on company, you're going to go down to the list where it says make general journal entry. And this is where you can now finally say, you can finally write off that Mr. Bob Mason isn't going to actually pay me at all. So I could say it's fast forward, right? This adjustment is going to be made. I could say I want to write off. I want to write him off right away. So I could say, all right, it's February, right? I can write him off right away. But in this case, I'm gonna continue to keep pursuing him until I think it's enough. So I'm gonna say the end of the year, after 10 months of bothering him and he's not budging, and he finally comes up to me and says, sorry, no can do, cannot pay you. Now you can go ahead and enter in, right? You're going to say, so he owes me $285. So I'm going to move that into my bad debt expense account. Okay? And this, because all expenses are usually debited, you're going to be debiting the $285 right out from the account. Okay? And you're going to be taking it out from your allowance for doubtful accounts account for the $285. Your memo here is to write off Bob Mason's bad debt. Right? You can put that for both, right? You can use your copy and paste tool here. Okay? And once you have that, again, that's all you have to do to ensure that if Mr. Bob Mason decides to not ever pay us, this is how we properly execute it and write off the bad debt properly. Okay? And then we can save and close. Okay? Any questions in regards to dealing with bad debt? Okay? Any questions?
No.
All right.
Can I say yes? If you know that he's not gonna pay you, you cannot void the invoice and that's all.
No, because voiding the transaction is going to hurt your business because that's going to put a hole in your accounts receivable because you already sold the product to them. You sold something to them and you're just not getting money back for it. You can't void the transaction because they never gave you back the items. So in this,
Now, if you wanna pay the next year,
if he ends up paying the next year, then you just record the deposit or you just record the check afterwards. So in this case, yes, there's always a potential possibility, but most likely if you've been harassing him for 10 months and he's not budgeting, you can already say this guy's not going to pay. Done deal. Okay? So I mean, I have never seen a customer after 5 years later or a year later come back and pay me.
now sometimes but you the things come better and you wanna again to have a service from this company, so you back again and so
Well,
don't pay what you I don't know something like that.
I mean, in a perfect world, if people have that kind of morality where they say, hey, I owe this person so much money, right? Then they'll come back and pay you. But in this case, right, they probably have bigger problems that they are dealing with if they can't pay you a simple $285. They probably owe a lot more than that. They probably have to file bankruptcy. So at that point, there's no possibility. Now, if that customer decides to come back and tries to create a new account with you, and you know for sure that they owed you money in the past, then that's up to you whether you are going to accept them or not. Okay. So that's just showing you what happens when you have those customers. And it does happen because, again, situations like today, right? All of us, we got bills to pay. And unfortunately, we can't pay it because we don't have a job. So that is where this is going to be a potential idea for in case you do run a business and you are allowing customers to owe you an account, that you do need to know not all your customers are going to pay you. Okay. So let me see what is next, okay? I think I can be able to teach you this one last section. So then tomorrow we only have a few more things to just go over quickly for chapter 3. All right, so the next section that we have here after you've gone through the whole bad debt section is going to be talking about batch invoicing. Now, the great thing about QuickBooks is it allows you to produce multiple invoices for multiple people at one time. Now, of course, there are some little, There are some requirements that you need to know when you do batch invoicing, okay? So this is only if you are producing the same exact identical invoice for these multiple people, okay? So a great example is if you charge your customers or if they are members of a particular, if they buy some into your service, right, that they have to pay a monthly fee, then that is something that you can produce because you're producing the same exact invoices and you're mailing them out to all your individuals because they signed up for your membership. So in this case, if we want to go ahead and be able to do batch invoicing, this is how you do it. So once again, you're going to go into your QuickBooks, all right, under customers. Here you will be able to find batch invoicing. Let me see where. Oh, is it under here? Yes, create batch invoicing. So once again, you're going to get this message here that you are trying to make an invoice for multiple people. Yes, okay, whatever. Next. Okay, so then you're going to get this window here. Now this is for you to choose people that you want to send these invoices to. So first thing is you actually want to create the actual group itself. So again, you're going to add this group, okay? And you're going to name them club members. I think it's photo club. I don't know. If you want to be interesting, right, and you have tiers for club memberships, right, like your first one could be, the minimum payment could be backstage passes, or the next one could be full access, and then the last one could be red carpet. I don't know. You guys can make these membership dues however you feel like it. So in this case, right, I'm going to go ahead and just make this what it says in the book, which is a boring photo club, okay? And I'm going to click OK, or save, okay? Now here, I'm going to be choosing people who belong to my photo club, okay? So if you guys remember, I believe Ron Berry is part of my photo club. Mr. Tim Fang is part of my photo club. And again, I think Bob Mason is my last member of my photo club. Okay, so these guys, they get exclusive discounts or they get exclusive deals, whatever it is, because they pay into our membership dues. So there we have it, these 3 people, and I can go ahead and click next. Okay. Then it says, okay, you made changes to this billing group. Do you want to save the changes? Yes. Whatever. Next. So this is where you can start creating your items for the invoice. So again, we are going to say that these are membership dues. So that's the only thing that we have here. Oh, so DUE. So there you go, dues. All right. And here, because this is an item that I provide a service to, it automatically pulled up all the information for me saying that it costs $25 for being part of my photo club. Okay. And we're going to be using the Imagine Photography Service invoice. Okay. And I'm going to make it for not December, but I'm going to make this invoice available to be the 7th of every month. So, or actually, I believe in your book it says the 20th. So I'm going to make this on February 20. Okay. And I'm going to click next. So that's all I'm charging to my customers. Now, customer message, once again, thank you for your business. Or you can even make one up saying, thank you for joining my club. I don't know, whatever it means that you want to. But in this case, it's straightforward. I'm going to say, thank you for your business. Okay? And here, the total on their invoices is going to be, for each exact one, is going to be for $25. Okay? And I'm going to click next. So here, QuickBooks has already created these invoices right here to all my members saying they are due at the end of 30 days. Okay, some of them will get this. I don't want this person to have, which you can modify it in the when you get to the actual invoice themselves. You can actually modify it because it's not fair that all of these people have it due 30 days, but this one gets a discount off of the membership. That's not cool. So once again, you can always modify that when you get back into your actual invoice, because here we're just producing invoices for everybody. Okay? You can't modify individual because they all have to be alike. So once again, here you go. Everything looks okay. All right. Then we can go ahead and click create those invoices. Okay. And now it says to here that you have 0 marked for printing, 0 marked for email, and then last but not least, you have 0 that are marked that you can either send. In this case, you can either print these invoices out and ship them out and mail them, or you can send an email. And I'm going to say, you know what? I'm going to send an email. Okay? So if you do that, then you can write your email however you like. Okay? Again, I'm just going to cancel this window here because I'm not going to send it. So I'm going to just click OK. Okay? And there you have it. Ron Berry, Ron Berry, Tim Fang, they all have invoices for those dues. Okay? I think we're supposed to modify the invoice number, but that's okay. So that's how you create batch invoicing. So Ron Berry has one, Tim Fang has one, and Bob Mason has one. Okay? They all have the same exact invoice, except obviously invoice number are different. Okay? Any questions there? And you can go into them and modify them individually if you'd like. What was that?
No,
Okay.
no question.
Okay. So with that being said, this is exactly 4:50. So tomorrow we're going to continue on with customer statements and what you can do with that. So if there are no extra questions, you guys are free to go. I'll see you guys tomorrow.